ASML stock is down over 17% today due to a technical error that released their earnings report one day early. ASML was expected to report their earnings tomorrow on October 16th. However, on their website, they accidentally released their earnings report, showing a horrible report, leading to the stock tanking today. ASML is a company that designs and manufactures software and production for chips. Their biggest customers are companies like Intel and Taiwan Semiconductor. ASML in their recent report reported on the lower side of expectations for revenue, and in their earnings showed that China is only 20% of their entire revenue, when it was expected to be almost 50% of their entire revenue. So with this information, I wanted to decide whether or not we should buy the stock today. I'm going to first use my 7-step stock analysis to look at the fundamentals of the company. And then at the end of this video, I'm going to value the stock and see what the fair value price of ASML could be. The first metric that I like to look at in my 7-step stock analysis is the PE ratio. I want the PE ratio to be greater than 0. The reason I want it to be greater than 0 is because the PE ratio is the price of the stock divided by the earnings per share. And if it is greater than 0, that means the company makes money. As we can see here with ASML, ASML has a PE ratio of 46.53. This means the company is profitable, and that is a check mark. The next thing that I like to look at for ASML is the forward PE ratio. The forward PE ratio is basically the PE ratio, however, it's the earnings per share that analysts expect in the future. Since analysts expect a greater earnings per share in the future, this shows that the forward PE ratio is less than the trailing PE ratio. And as we can see here, it is less than the trailing PE ratio, and we also want the forward PE ratio to be less than 30. ASML has a forward PE ratio of 27.25, which is less than 30, so that is another check mark for ASML. Then I want to see revenue growth rate of greater than 5% for ASML. As we see in this chart, this is the revenue growth of ASML, and as we can see, it has been increasing over time at a pretty good rate. I would say at about a 10 to 15% rate, so this is greater than 5%, which is also another check mark for my 7-step stock analysis for ASML. Now I like to look at the EPS of ASML. The EPS is the earnings per share, so basically just the net income of the company. I also want this to be growing at a greater than 5% rate to show that the income of the company is growing. As we see in this chart, the EPS growth of ASML is also increasing pretty fast, also at about a 10 to 15% rate, so this is also another check for ASML. Next, I look at the shares outstanding of a company. I want the company to be buying back shares. The reason I want the company to buy back shares is if they buy back their shares, that means us investors, without increasing the amount of shares we own, we will own more of the company, since there's less shares outstanding for other investors to buy. As we can see here in this chart, the shares outstanding have been decreasing at a pretty constant rate for ASML, and as of late, they have been buying back pretty aggressively, which I like a lot. As we can see, recently they've been buying back at greater than 3% rate. So this is also another check mark for ASML, and so far it looks very good. The next thing that I like to look at is the total debt to equity ratio. Just like us, we do not want to have more debt than compared to the assets we own. So we also want this company to have less debt than their equity. As we can see here, the ratio is less than 100% or 1. It is 31.32%. So this is less than 1, showing that ASML has more equity than their debt, which helps shows us that it is very unlikely for the company to go bankrupt unless something very crazy happens. The final metric that I like to look at, and is one of my favorite, is the analyst expectations of future EPS growth. I want this greater than 5%. The reason why this is one of my favorite metrics is because the EPS almost directly correlates with the stock price. As we can see here, ASML is expected to grow at a whopping 21.55% rate in the next 5 years. However, I would say don't rely on this number too much just because it is analysts. They are not always correct. But nonetheless, this is a checkmark for ASML and shows that it is pretty likely for them to grow at a decent rate. Now probably the most important part is to value ASML stock. We want to buy ASML at a decent price to get a greater return. So I like to use a value calculator using predictions of the future to determine if we should buy the stock today. So I'm going to look at the revenue per share growth of ASML. Analysts expected ASML to grow at about a 22% rate. However, I'm going to put this at about an 18% rate. I think that's a bit too high and pretty optimistic, but it is pretty close to what I think. Then if we look at the net profit margin, over the past 1 to 10 years, it has been pretty consistent around 27%. So I'm going to put that at 27%. The cash conversion rate, I'm going to leave at 100%. And then the terminal PE ratio, I'm actually going to put this at 23. ASML deserves a premium just because of their revenue growth. Their revenue growth is much greater than the average company, and this is why I want the PE ratio to be greater. If a company grows faster, you would be willing to pay more for the company, which is why I increased the terminal PE ratio to 23. And the final thing that I do is put a discount rate of 15%. I put a discount rate of 15% to ensure a margin of safety. As we can see with our value calculator, ASML looks slightly undervalued. Today's drop might prompt a great opportunity to buy ASML at a great price. As we can see right now is at $723 per share, and my fair value price is $785. If you bought the stock today with these predictions, you would return about 16% over 10 years, which is a great return and almost doubles the historic margin of the S&P 500. So if you guys like this video, please subscribe and hit the like button. Thank you for watching.